Hahn-Tech Premium Trading Tools, professional quality tools designed to sharpen your edges. Hi guys, welcome to the video. I'm really excited today to be announcing the release of our upgraded version of Divergence Lines Indicator. This is one of our most popular premium indicators on the Hahn-Tech website. The original version was released in 2016. Each time, those who have purchased the previous versions received the upgrade without any additional charge. And that's going to continue on with this upgrade. Anybody who has purchased a previous version of our Divergence Lines Indicators for Thinkorswim is going to receive the upgraded version without any additional charge. And boy, this is packed with new additional features. One of the most significant of which you see on the chart is that I've converted the Divergence Lines Indicator into a chart strategy that you can use for backtesting. And along with this, we are including, for no additional charge, a companion strategy that I created called Stops and Target Exits, which is a standalone chart strategy that handles exits for any chart strategy that you want to use for backtesting. It includes a profit target, it includes a stop loss level, and it also includes a trailing stop that is optional. And when you combine these two together on the chart, you're able then to optimize the various parameters regarding your risk-reward ratio and examining your win-loss rate to optimize your chart strategy to identify profitable edges in the market. And just a quick reminder that chart strategies on Thinkorswim are not able to automatically place live trades in the market. You must still manually place your trades and execute your trades and manage your trades on your own, but the chart will display the various levels and signals, and we will show you in this video how those signals play out on a live chart and how you would then trade those in a simulated or live environment. And we've also included a new watch list. Actually, there are two custom watch list columns that we're now including in this indicator package. So now you're going to have a chart strategy, a chart indicator, you're going to have an exit strategy, you're going to have two custom watch list columns that are color-coded showing trends and recent divergence signals, as well as the scan that was originally included with this indicator from the beginning. And not only that, but the indicator itself has received some very significant upgrades. There's a lot of new features that allow you to filter out divergence signals based upon overbought, oversold. And the indicator has the ability to plot the trend in colored bars or a colored moving average, depending on your settings. Let me turn that on for you real quick so you can take a look at it. And those colors are coordinated with the column that you see on the right. There's two columns here on the watch list. The one on the right is showing the different colors for the different trend stages. And you have also the ability to plot color legend that shows you each color and its meaning. So you've got max and min bullish, you've got min and max bearish, and in the middle you've got neutral. And there's additional plots that you can turn on to show you exactly how these trends are determined and measured from the price action itself. It's using the divergence patterns plus a mixture of swing pivots to determine the trend, basically support and resistance. It's based upon horizontal and vertical support and resistance. So I'm really excited to get started, so let's get going. And now I will take some time to cover the legal and moral obligations of any video containing material of this type, which is to clearly state that I am not a professional trader. I am not a certified financial advisor. Nothing in this video should be considered a recommendation or a solicitation to buy or sell any financial instrument. Trading involves risk, and that risk means that you may lose all or more than all of the money you have deposited in your broker's account. Along with that, I will also point out that with strategies, you have some additional declarations here, right here from Thinkorswim themselves. Okay, and I'll go ahead and blow that up a little bit so that you can see it clearly. The study parameters and data use historical market data and information gathered by TD Ameritrade. All output is for informational and educational use only, is not an investment recommendation or advice, and should not be relied upon in making the decision to buy or sell a security or pursue a particular investment strategy. Okay, it's very important. I know we have to cover those disclaimers and give you those warnings. And at the same time, we're making available these tools and showing you how to use these tools to identify edges in the market and setups that you might want to trade in the future. So please be very disciplined in your approach to backtesting. You want to make sure you do it carefully. You want to make sure you do it thoroughly. You want to make sure that you test everything on a simulated account before you start trading on a live account. And when you do move from simulated trading to a live trading environment, you want to do so with limited size. Those are all just basic guidelines for being smart about applying your knowledge in the markets to your trading. And I'll cap that off by reminding you that these are tools, and tools are inanimate objects. They lie on the bench until they are picked up. And if they are picked up and put into the hands of a skilled technician, then they can do marvelous things. But if they are picked up and put into the hands of an untrained individual, they can cause great damage and harm. So take this seriously, be intentional about your work, and understand that you need to take the time to learn how to use the tool properly and effectively. I know you guys are eager to get started and see what these babies can do, but I also wanted to mention that this video does serve as the full and complete user manual for these indicators. And this is not really designed to be sales and marketing. I'm not trying to make a sales pitch here. My goal in this video is to show you how to adjust the various settings in the indicators to get the behavior that you are seeking to match with your existing strategies or come up with your own. But I do understand that many people will be viewing this video also to determine whether they want to purchase these indicators. So I'm going to take a little bit of time here. I'm going to show you where to locate them on our website, and I'm going to show you what's included in the indicator toolbox, and then we can get into the details. Okay, and let's show you where to locate these indicators on our website. If you go to the Hahn-Tech website and you go to the menu at the top here, you select Premium Indicators. From that, you select Thinkorswim Premium Trading Tools, and it will take you to this page that you see here. And here you will see a list of all of our premium indicators that are currently available, as well as pricing. There's an order form down below that, which I will show you next. But for the topic of this particular video, I want to point out that we are focused on this one right here, Hidden Divergence Trend. And you will notice that there's some screenshots here, and all of our indicators include little screenshots, and you can open those up to view them. You can even expand that even further to a full screen, and then you can just kind of click these arrows here on the right or the left to navigate through the various screenshots. And each of our premium trading tools are also accompanied by a demo video, which is actually what you're watching now. And the demo video actually serves as the complete user manual for these trading tools. So you also have some pricing listed here. If the pricing you see on this video doesn't match what's currently on our website, don't panic. It means we had a price increase. Every January, I increase prices by a modest amount just to keep pace with the cost of living increase. And let's see, down here I want to also point out there's another package called Trailing Stops and Targets. It's a package that includes 5 separate chart strategies, and one of those 5, which is this one right here, I'll go ahead and point that out, Stops and Target Exits. That's one of the 5 available in this package that is included with each of the divergence indicators. So if you buy the hidden divergence or you buy the standard divergence, you're going to receive the Stops and Target Exits, which is one of 5 chart strategies available in this package down here. So if you want to learn how to operate the Stops and Target Exits and you want to see more examples of how that is applied to the divergence indicator, or if you want to see examples of the divergence indicators paired up with the trailing parabolic or a trailing ATR stop loss, then you'll want to go ahead and view this demo video, because you may want to purchase this along with the divergence indicators, because those other trailing stops may provide another avenue for you to backtest and optimize your trading system. So now I want to go ahead and point out how you place your order. So at any one of these sections here, you can click the yellow Order Here button, and that will take you down to the order form. And you want to review all the details here. We've got instructions, explains the whole process. For this particular video, we're dealing with these 2 indicators right here, Hidden Divergence, MACDX2, and Hidden Divergence RSI and Stochastic. They're 2 separate indicators, and you may choose one or the other, or you may purchase both. And the discount is really applied based on how many different tools that you purchase. So if you buy between 2 and 3, you get 10% off. If you buy between 4 and 5, you get 20% off. If you buy 6 or more, you get 25% off, and that discount is applied to the subtotal, which you see here, and the grand total is calculated right there. And then be sure and read the rest of these instructions and tips here. But if you want to go ahead and submit the order, then you must check this box. This is required that you agree to the privacy policy and terms and conditions. Then you go ahead and click that, and then the submit button appears that you may go ahead and place your order. And before we get into the settings overview, I also want to share with you a brief list of questions which I have prepared for those who are viewing this video with the idea of evaluating whether this particular trading tool is a good fit for their existing trading methodologies. So let's go ahead and take a look at those questions right now. Do you already use divergence signals as part of your trading setup? If not, then this trading tool is not an automatic fit for you. That's just a plain fact. Okay, divergence is a specific pattern where price and the momentum of price are diverging from one another. And if you're not already using that in your trading methodology, then you need to do some homework first. You need to really research that and understand whether or not applying a divergence pattern to your existing methodology will even be a benefit. So if you are already using divergence signals as part of your trading setups, the next question is you want to ask yourself is, what are you using? Are you using the MACD? Are you using the RSI? Are you using the stochastic? Are you using some other lower studies? So within this indicator, we have a choice between the MACD X2 or the RSI or stochastic. Okay, you have two choices to make. You're either using the RSI and the stochastic for divergence, or you're using the MACD, the value line and the histogram. If you are using some other study for your divergence patterns, then please contact us, because I have built several custom versions for lower studies such as a CCI or a momentum or an awesome oscillator. There's many other oscillators out there for the lower studies that work really well for divergence patterns. I just happen to select the most popular ones for the indicators that we sell and publish on our website. Okay, the next question, does my trading setup attempt to identify the trend and enter at potential pullbacks within the trend? Okay, this is hidden divergence. Hidden divergence is meant to be a trend continuation pattern. This is not about trend reversals. This is about trend continuation. So with this type of an indicator, what you're looking for are setups where an established trend is already present on the chart, and you're trying to find opportunities where you can enter on a pullback within the direction of that trend. Okay? If that's part of your current trading methodology, if those are the things that you are already trying to identify in the market, then this might be the right indicator for you. Do I typically identify trend direction using swing pivots within the price action? So essentially, are you using the price action and looking at previous highs and lows to identify support and resistance levels, and then determine whether or not you are bearish or bullish on that particular market? If that's a yes, then this indicator is going to provide some helpful tools for that. Next question, do I believe that backtesting my setups will help me be a better trader? Backtesting is not for everyone, but backtesting is one method that you can use to research your setups, to adjust your settings and optimize the parameters so that you can then try and test those on a live market in a simulated or a live market with a very small size to determine whether or not your backtesting optimization is going to be profitable going forward. If you're really into backtesting your setups, if you're very interested in understanding how to backtest your setups, then this trading tool provides that functionality and may assist you in optimizing your own setups. And the last question is sort of an amplification of number 4, which is, am I willing to put in the time and effort to perform exhaustive backtesting and analyze the results to find optimum parameters for my setups? This sort of work is grueling. It's boring. It's like watching paint dry or grass grow. It's not fun. Many people do not like to stare at spreadsheets or crunch numbers or build formulas or analyze data, but some people thrive on this kind of a thing. So I think we've got something for everyone here. Like I said, if you can answer yes to at least 3 of these questions, 4 would be great. If you can answer yes to at least 3 of these questions, then this may be the right indicator for you. Okay, and I hope that helps you. Just keep those questions in mind as you're viewing the rest of this video and any of the material that's presented on our website. Okay, so let's go ahead and look at our list of topics in this video so you understand where we're at and where we're going. We've just completed the overview. We've also completed where to find this indicator package on Hahn-Tech.com. Next, we are going to be reviewing the installation and setup, so you will see which files are included. You will also learn how to import study files and strategy files into Thinkorswim. I will also be showing you how to take the text files and copy and paste that code to create your custom watch list columns and scans. Once that is completed, then we are going to have an overview of the settings. And once we complete the overview, we're going to get into the detail. I'm going to show you every single setting that's available, how to adjust them on the chart strategy, which is also the same settings as applied on the chart indicator. So the chart study and the chart strategy both have the same settings. And I'll also along the way show you how to adjust the settings within the code for your custom watch list column and custom scans. And that would then bring us to the section here, example chart. This is where I attempt to predict all the questions that are going to be asked in the comment section. When people are asking, does this work on futures? Does this work on Forex? Does this work on a tick chart? Does this work on a range bar chart? So that's the section of the video that we're going to cover those questions. And then the last and final section, which is the most important section of the video, is going to be the live demo. It's not live, it's a simulated live demo in which we use the on-demand feature, which does have a few bugs and quirks here and there, but we're going to be using the on-demand feature because it gives us the benefit of hindsight and allows us to replay a section of the chart. And so you definitely want to stick around for that section of the video. That is probably one of the most important portions. Okay, so let's right into the installation and setup. Now I understand that most people are probably using Windows, so I will go ahead and demonstrate the installation and setup from the Windows machine. I think most folks who are using Mac these days understand how to use both operating systems, so I think if you understand how to do this on a Windows environment, you should be able to do this on a Mac. I'm using Windows 11, and I've got everything set up here ready to go. So I want to show you that when you receive an email after payment of the invoice, that you will receive a zip folder, and the zip folder will have to be extracted. First you have to download it. So in this case with Yahoo Mail, you have a little download button. You click on that and it downloads it to your downloads folder. I can't demonstrate every single possible email client, so you'll have to figure out on your own how to work with your own email client, whether it be Gmail or Outlook or any of the others that are out there. So I'm going to demonstrate using this one. So I go ahead and click that download button, and you can see the file has already appeared, and that's our file right there in the downloads folder. Now you've got a couple of different options here. You can extract all, or you can right click and select open, but I like to just simply double click to view the contents. Now these top three files are specialized files that can only be imported into Thinkorswim. Notice the computer thinks that they're a video file. The computer is confused because Thinkorswim fails to register their file types with the computer as files related to the Thinkorswim platform. So what we're going to have to do is import these, but first we have to extract them from the compressed folder. And so what I do simply is I click and drag to select them all, right click and select copy, and then I go backwards one step back to the downloads folder, okay? And then I right click and select paste, this little button right up here, select paste. All I've done is I've made a copy of the files that were compressed and brought them out in an uncompressed form into the downloads folder. So now I'm going to show you how to import a study file, and then I'll show you how to import the two strategy files. There's a slight difference between each. Once we complete that, then I'll show you how to set up the custom watch list columns and the scan by copying the code and pasting them into the appropriate locations. So here I have Thinkorswim open in the background. I'll just move this to the side a little bit because I think it's important that you understand how the different files are located in Thinkorswim. I'm going to just put any kind of ticker symbol here on the chart so that we can add a study to the chart, and then I go ahead and click the Edit Studies button, and that opens up the Edit Studies dialog. Now again, I said that if you're going to import a study, it requires a special step, and that is being on the Studies tab, which is default. If you're going to import a strategy file, you'll need to be on the Strategies tab. Okay? Pay close attention because people get tripped up by this. So here we are on the Studies tab, and we click the Import button. Once we click the Import button, we're going to need to navigate on this computer to locate the downloads folder. Right now it defaults to the documents folder. I'm going to go up one level to the user folder, and in the user folder you will find the downloads folder. Let me move this to the side a little bit so we can identify that this Hidden Divergence MacDX2 is a study.ts folder, and that's located right here in our downloads folder. I wanted to help you guys make that connection. Okay, so until it's downloaded and saved and extracted, it won't show up here in Thinkorswim. But now that it is here, all we have to do is click open, and it imports it into Thinkorswim. This file already exists on my account, so I don't want to overwrite it or replace it with this one, so I'm going to hit cancel, but you will hit open, and that will import it into Thinkorswim. Now how do we add that to our chart? Well, we simply type in the name of the file, and you don't have to type in the whole thing, just a portion of it. So here's the file that we would have just imported had we not had this already in our system. So that's how you go ahead and search for existing studies, and then you just simply double click and then hit apply and OK, and now it's loaded on the chart. So now let's go ahead and show you how to do the strategies. I'm going to go ahead and remove that study because we don't really need that right now. And let's go ahead and go to the strategies tab of the edit studies window. Now we're looking at strategies instead of studies. And now when we click import, we will be able to see the strategy files instead of the study files. Let me move that off to the side here. And again, we have to navigate up one level to find the downloads folder. I'm going to double click on the downloads folder, and then you see here we've got the two files. Okay, look familiar? Right here. Okay, I wanted to make sure you understood how all of this is connected together, because it's really easy to get lost for people that don't understand how to navigate in their folder directory. Okay, if we go ahead and press and hold the shift key and then click the last item in the list, it will highlight multiple items, and that's just a simple keyboard shortcut common to all Windows computers. And then we can click open, and it will import both of those strategies into Thinkorswim. Mine are already loaded, so I'm going to hit cancel, but at this stage you will hit open. All right, so I'm going to hit cancel because those are already there. Now how do you load those files onto your chart? Well, you type HTB because it's a backtesting strategy, and then you start typing the word hidden, and there it shows up. So you can double click that, add it to your chart. Now there's another one, HTB underscore stops, and that's the other file. You see that right there? Okay, and you double click that, and you click apply and OK, and we've added both of those to our chart. So I've just shown you how to download a zip file, extract the files from the compressed file, and then import those files into Thinkorswim. Now we're going to work with the text files that contain the code for the watch list columns and the scan. Okay, I've gone ahead and set things up ahead of time by opening those text files and putting them down here at the bottom of the screen. I really do need to protect that code from view because this is a public video and we don't want to disclose the code. Now I'm going to show you how to detach a new watch list gadget. You could simply work with the watch list there as it is in your sidebar. Okay, try to repeat that again. You see how you open that sidebar? If your sidebar is not open by default, mine, I leave it closed all the time, but you click on that button right there and then you have your gadgets. What if you don't have a watch list gadget here? Well, then what you do is you change the gadget, you switch gadget and you select watch list. Okay, what I did is once I have a watch list selected, then I click the menu and I select detached gadget because I find it easier to work with the watch lists when they are detached. So let's go ahead and move that over here for the center of our work. Then we right click and select customize, and I'm going to remove the column that's there, and then I'm going to add a couple of columns. Now your custom columns are all located under this category. Okay, so you see I click that drop down button, and from that drop down button I have several filters that will allow me to filter by column type. I'm going to select custom quotes as my filter type, and then you can see I've got a list of custom columns here. So I'm going to go ahead and add two to the panel on the right, and then we're going to go ahead and add the code from the files that we downloaded and extracted to the custom watch list. All you do is you click on that little script icon right there. You see that little script icon where I have my mouse, and that opens up the code editor. Okay, and then what you want to do is get rid of all the code that's in here. What I like to do is use a keyboard shortcut, Control A, and then you can press Delete on your keyboard, and that clears everything out. That's really the safest way to do it. Okay, so which one of these two are we going to install first? Let's see, we want the count. We want this one, okay? So all I'm going to do is right-click anywhere in that document and select all, and then I'm going to right-click anywhere in that document and select copy. Okay, so let me do that again for you. Okay, it is right-click, select all, and then anywhere else, right-click, select copy. Okay, you could also use keyboard shortcuts. You can use Control A for select all and Control C for copy. And then we come up over here to our watch list column. You see it says a custom quote formula. Then we can right-click and select paste. And then we have everything loaded for our first column of our watch list. You want to go ahead and adjust your time frame as needed. I'm going to use the daily time frame here. Hit apply and OK. And now we need to do the other one. So I'll go ahead and open that up. And then again, I'm going to use my keyboard shortcut, Control A, and I'm going to delete everything that's on there. And I'm going to go to the other custom watch list column code. I'm going to go ahead and right-click, select all, and then right-click and select copy, and then come up here and then right-click and select paste. Okay, very simple. Then I hit apply and OK, and now we hit OK here because we've updated the code in our two custom watch list columns. Let's say you wanted to rename those. Okay, if you wanted to rename those, you do so right here, right next to selecting the time frame. And when you rename those, then there'll always be that name in your list of custom columns. I'm going to leave mine to the default name, and then I'm going to click OK, and then you can see that it updates and starts showing all of the metrics for which it was designed. Okay, so that concludes the watch list column setup. Next, I'm going to show you how to set up your custom scan. So we'll go ahead and close the watch list gadget and then go to the scan tab of Thinkorswim. Okay, so here we have our scan tab on Thinkorswim. I'm going to go ahead and start off with a brand new scan by hitting the reset so that you guys can see some of the different features that you might want to set up. I've got a category here that I'm going to select for all optionable. I'm going to intersect with a category called all stocks, and I'm going to exclude a category called over the counter. I'm going to get rid of all these stock filters. You see these 3 stock filters here that are here by default. I'll remove those. I'm going to add a new filter. The new filter is going to be a study filter. A study filter is the only type of filter you can add to a scan that includes custom code. In order to add the custom code to the scan, you click on the edit button, which is right next to where you select the time frame. So you go ahead and click that pencil icon, and it opens up the code editor. And you want to make sure you go over to the Think Script editor. It may default to the condition wizard. You want to move over here to the Think Script editor so that you can remove all of the code that's in here. Just whatever's in here, just get rid of it. Okay. Now down here I've got my code for the scan. You see the HTS in the prefix of the file name. So I'm going to right click and select all, and then I'm going to go over here to the study filter custom editor and then right click and select paste, and there we go. Now go ahead and hit OK, and that's it. The scan is all set up. Now later on in the video I'll be running some scans and showing you some examples, so we really don't need to look at anything else at this point in the scan. We'll go ahead and cover those additional details later on in the video. This concludes installation and setup, and now you are ready to follow along with all of our examples. And now we're going to go ahead and cover the settings overview. But before we do that, I just wanted to show you guys how to access some more resources on the Hahn-Tech website. For instance, what if you don't know anything about running custom scans? Well, we've got some tutorials on our website that will help you there. So for instance, you go to free tutorials, Thinkorswim tutorials, go ahead and select scans from the menu at the left, and then you want to select Thinkorswim scans beginner to advanced. You'll find a topical index so that you can jump to specific topics that you want to cover, or you can watch the entire video from start to finish, which is highly recommended if you've never run a scan on Thinkorswim before. And I'll point out some other resources for you. Down here at the bottom, you'll see the menu item for watch lists. So you click on the watch lists, and then you can go ahead and view some of those. What I would recommend if you've never done anything with a watch list before, first you want to know how to import ticker symbols into a watch list. And the other thing is you want a really good overview of custom watch list columns. So go ahead and view those, and that will get you up to speed pretty quickly. Okay, and with that, I think we'll go ahead and get to the settings. Here we have the overview of the settings. It's a list of main features. So this review will help you to get a good foundation so that when we do get into the charts and start adjusting the settings, you'll have a pretty good idea on what to expect and what each of these settings is intended to perform. I'll begin by explaining the table at the top that you see here. There are two columns. One is for the MACD X2 and the other is for the RSI and stochastic. Those are two completely different indicators that you might purchase separately. They're listed on the order form that I showed you just a few minutes ago. And this shows you the list of files that are included with each one. And I'll explain here briefly. The prefix here stands for Hahn-Tech. The letter, the small letter that follows the HT, tells you which type of file that is. A for analysis, so that's the chart study. S is for scan, so HTS. That's Hahn-Tech scan, so that's the scan associated with that indicator. And then you have two watch list columns here, indicated by the HTW. And then you've got two chart strategies, indicated by the B for backtesting. So these last two files here are for backtesting. Then you've got a list of the files for the right-hand column for the RSI and stochastic. Most of this video is going to be focused on the MACD X2. That seems to have been our most popular. But I will be showing you some of the screens for the RSI and stochastic to show you some of the differences between these two. Now we'll go ahead and review some of the main features and the settings that are available. So first we have the chart study. Okay, the chart study displays divergence patterns with trend lines on the price graph, which you can see in the background here on the chart that I have. You have the option to show trend direction and strength based on divergence structures. The trend direction can be shown as paint bars or multicolored moving average. So depending on your preference, you can have it paint the bars for the trend, or you can have it display a moving average that is colored based upon the same coloration scheme as the paint bar. Each of these measures divergence based on two separate lower study elements. The MACD is measuring divergence based upon the MACD value line and the MACD histogram, and I will point out each of those when we get to the charts and start looking at examples. The RSI and stochastic measures divergence using the RSI line and also the stochastic full K. You have the option to filter divergence signals using overbought, oversold conditions. And you have the ability to adjust the overbought, oversold levels as well as choose from between the RSI or the stochastic for your overbought or oversold conditions. There's a custom scan included, and the scan includes two signals, one for any positive divergence and one for any negative divergence. The scan will return a list of stocks for which the divergence pattern is locked in if you are scanning a daily chart at the end of day. If you are scanning a daily chart in the middle of the day, it will be picking up divergence signals which may not have been locked in yet. Similar functionality if you use a intraday time frame. Then we have two custom watch list columns. One is showing the divergence direction with a bar count, and the other shows a trend direction with a bar count. And each is color coded so you can tell them apart pretty quickly, and the numeric values allow you to quickly sort the watch list columns so that you can group or identify specific patterns that you are looking for. The chart strategy includes everything plus the following. Plots theoretical buys and sells, also called strategy orders, directly on the chart. The strategy orders are used for backtesting and optimizing your trade setups. The chart strategy on Thinkorswim is not, I repeat, not able to execute orders on a live market. There is nothing within Thinkorswim that allows a chart strategy to place orders automatically for you. This is strictly for backtesting and for trading a live chart manually, placing your orders. Strategy order entry types. We have 4 different types of signals. 2 of them are for confirmed divergence, both positive and negative, and the other 2 are for broken divergence, both positive and negative. And these last 2 can be turned on or off. That is an option that you may select. Intraday time frame. So you've got some intraday time frame features that will be available, and we'll show you how to use those. You've got the ability to adjust the trading hours start and end time, and this will impact the span of time within which new entries are permitted by the chart strategy. So for example, you may backtest a scenario in which you have extended hours included on the chart, but you only want the strategy to be posting theoretical buys and sells within a specified time period, for instance, the regular session market, or any other time frame that you pick between start and end. It also includes a feature that will flatten the position before the end of market or at the specified time. So for instance, the default time is 3:45, and it will automatically close out any open positions on the chart for the backtesting. And this will enable you to backtest a scenario in which you don't want to ever hold a position overnight. So you use the timeout, is what I call it. It's a timeout exit. And you use that to flatten the position before the end of the trading session. So that way you're backtesting that type of a scenario. If you would prefer to backtest a scenario in which you use an intraday time frame but hold trades overnight, then you simply turn that feature off, and I'll show you how to do that. Trade size can be adjusted for shares or account equity. And for the trade shares, you just go ahead and enter the quantity. If you select equity for that setting, then you will need to update the account equity and update the percent of equity that you want to use. Thinkorswim does not have the capacity for reading your actual account equity, so you will have to manually enter that value yourself and adjust that as needed. All right, that concludes the overview. Now we're going to get into the charts, and we're going to actually look at the settings. I'm going to walk you through step by step, showing you examples. And again, I'm going to also show you, where applicable, how to adjust the settings on the watch list columns, which will also show you how to adjust them on the scans. Okay, so let's jump right into the charts and begin reviewing all of the settings. I'm going to update this chart here. There we go. We got Apple on display. And let's go ahead and open the Edit Studies window and get a view of the studies that we have loaded here. This is the Hidden Divergence V2 version 2, and we also have its companion chart strategy, stops and target exits. How do we know these are chart strategies? Well, because we have a prefix here, HTB, B for backtesting. Okay, so once again, the Hidden Divergence V2 is loaded on the chart. It is currently set up for long only, and the stops and target exits is also set up for long only. Let's go ahead and take a quick look at the stops and targets settings. I'm not going to cover all of these in detail. The only one we're going to be reviewing really is the trade direction. If you would like to understand how to adjust all of the settings for the stops and targets exits, then I'll go ahead and refer you to the Hahn-Tech website. Let me go ahead and show you where to locate that demo video. Okay, so you go to the Hahn-Tech website, you go to the main menu at the top, you go to Premium Indicators and select Thinkorswim Premium Trading Tools, and you will arrive at this web page right here. And then you scroll down to the very bottom. At this point in time, that's where it's located. This is a package called Trailing Stops and Targets package. Now, this package contains a total of 5 individual chart strategies, and only one of those 5 is included with the Thinkorswim divergence indicators. You can go ahead and view the demo video by clicking on this link right here, and I'll show you that this is the item right here, stops and target exits, and that is the one of the 5 that is included with the hidden divergence. If you would like to understand how the parabolic or the trailing ATR strategies will work with the divergence indicators, you can also view this demo video. I've got plenty of examples in that demo video showing how the parabolic and the trailing ATR chart strategies work as well. Okay, so once again, we've got our stops and target exits set to long, as well as the Hidden Divergence V2. So the first thing I'm going to show you is the setting that controls the share size. And before I make any changes, I want to go ahead and mark the specific settings that are tied directly to the chart strategy. The chart strategy is using up all of these settings that you see here marked. When we get down to this one right here, the fast length, those are the MACD settings, as well as all the other settings. So everything from here down is common between the chart strategy and the chart study. That's why we're reviewing all of the settings from the perspective of the chart strategy, because it contains all of the settings. And I just wanted to make sure you understood which group of settings were dedicated strictly for the chart strategy and which ones are common to both. Okay, good. So just wanted to clear that up. And so we go ahead and look at this first setting here. Trade shares is set to 100, and the trade size type is set to shares. Let me go ahead and move these screens over here so you can see the quantities at each order. You see the value LE and the hist LE. That's for value line long entry, histogram long entry. And it's currently set to 100. That matches what's here in the settings. So if we change that to 50, then what we will see when we hit OK and apply is the values of 100 will change to 50. So that controls the number of shares that are posted each time the chart strategy posts one of these theoretical buys and sells. Now we go back into the settings and we can go ahead and update that back to 100. And I'm going to go ahead and also adjust this first setting to equity. So you've got two options here, shares or equity. And when you change this trade size type to equity, then what happens is trade shares is completely ignored, and account equity and percent of equity are the two settings that are going to be applied. So what happens here is we've got a value of 10,000 for default value, and we apply 10% to that, so that's 1,000. So what's going to happen when we apply this, having set the trade size type to equity, is the strategy is then going to try to buy as many shares as possible at each entry point within that $1,000 limit. So we'll hit OK and apply. And you can see that down here we've got a total of 7 shares traded because it was able to fit 7 shares within that $1,000 limit. And then up here the price is a little bit higher, so it was only able to fill 6 shares out of that $1,000 available for trading. So when you have this setting set to equity and you adjust these values here, that's what's going to be controlling the number of shares. And as the price of the stock that you're backtesting goes up or down, the number of shares is going to be adjusted so that it fits within that limit, 10% of 10,000 in this particular case. Okay, so I'm going to go ahead and set that back to shares, and then the next thing we're going to take a look at is trade direction. So we're going to switch it from long to short. We have 3 options here, long, short, or both. So I'm going to change it to short. Now when I do this, before I hit apply, I'm also going to need to update the other chart strategy, which is the stops and target exits. This one also has a similar setting for trade direction, and it's either long or short. There is no both available for the stops and target exits. But you need to make sure that they're both set in the same direction. You want to make sure they're both set to long or they're both set to short. And when I hit apply and OK, then we'll go ahead and take a look at the chart. And you can now see that we've got a short entry over here, so minus 100 shares, and it took it out at a profit here. You see the target SX. And then there's another trade over here. There is a value SE entry, and it looks like it came back and hit the stop loss level here, so that was a loss. See the stop SX. And then over here likewise we have another short entry, and it looks like it backed up right into the stop loss and took it out for a loss on that particular position. And I've got some other charts set up here, so if you wanted to take a look at the RSI in a short position, so here is the Hidden Divergence RSI stochastic along with the stops and targets exits, both set to short, and that will allow you to make a comparison there. So now we're back to our starting point, and let's go ahead and reset this back to long. So the next thing I want to do is show you the setting for both. So trade direction, long, short, or both. And when we change it to both, we're going to have to do something unexpected, right? When we change this to both, we're going to have to exclude any type of exit strategy here, okay? Because when you set this Hidden Divergence MACDX2 to both, it's going to revert to a stop and reverse type of trading system. So let's go ahead and hit apply and OK and take a look at this. And so what happens is it will go ahead and take a long right here. You see that long position it posted right there. And then at the next time there is a short entry signal, it goes ahead and reverses from long to short, right? So here it initiates the position for 100 shares long. Over here there's a short signal, so it goes ahead and then closes the long position and then opens up a new short position, 100 shares. Now going from left to right, there are no more long entry signals, and so this strategy as it is now will remain short until the next long entry signal appears for the chart strategy. Let me go ahead and set everything back up the way it was, and we'll continue on with the next setting. Okay, so the next setting, let's go ahead and move this over here. Trying to think of a good place to put this so that you can see most of the chart. Then I'll go ahead and open up the settings, and the next setting is Trade Broken Divergence. The best way to explain this is to turn that setting on and then show you the signals that it takes on the chart. So let's go ahead and do that. So trade broken divergence. Notice the trade direction is long, so we're still only going to take long trades on this chart strategy for backtesting, but we're also going to include broken divergence as potential entries. So hit OK and apply, and then OK. Now let's go ahead and zoom into this section of the chart over here. You can see that this is a broken negative divergence. So here was a negative divergence, which would have been a short entry signal if this chart strategy had been set to short, but it's set to long. So what it does when you enable broken divergence as an entry point, it will actually take the opposite trade if that divergence signal fails and the price trades back up above that high in this case. And I think there was another one over here to the right. Yes, this is another broken negative divergence. Okay, and that one didn't work out either, but if you had put the stop a little bit lower, perhaps it might still be in a position, but I'm using the default values here, so we're not really too concerned about performance at this stage. My goal is to help you understand how the settings work, because you're going to be the one deciding which settings are best for your particular trading style. And this also works on the short side, so let's go ahead over here to the short side RSI and stochastic version of the indicator, and we'll set up the chart to include broken divergence, so trade with broken divergence, and it's set to short. And again, this is the hidden divergence RSI stochastic, so we'll hit apply, and you can see there's one signal over here. There we go. So you got a broken positive divergence. In this case, that is a positive divergence that would have been a long entry signal, but the chart strategy is set up for short only, and in this case we've enabled entries for broken divergence. And here it is, this bar that trades below the low of that positive divergence signal is the one that initiates an entry. Now you can see here that it got stopped out. If you had maybe backed that up a little bit more, you probably could have gotten some profit out of that particular trade. The hidden divergence as a whole does not present very many signals as compared to the standard divergence. So we don't have a whole lot of examples to pick from at this stage. But let me go ahead and look at another chart. There we go. So we'll go ahead and take a look at this one. Here it is, another positive divergence that would have been a long entry, but instead we've enabled broken positive divergence as an entry point because this is a short only setup here. And then you can see that it got taken out with a profit pretty quickly, a couple of bars. Again, if you had extended that target down here a little ways, you could have gotten quite a bit more profit than what you see. I'm going to leave the broken divergence on for the remainder of the video so that we can get more exposure to that, just to make sure you guys understand it, really well. The next setting is tied directly to the broken divergence. This setting is called broken within bars, and I'll go ahead and explain that using the examples that we have here on the chart. Let's go back to the short side, and we have an example here that's got several bars, so let's go ahead and bring that up. The divergence signal itself is not counted. The confirmation bar becomes bar 0. The count always begins at 0, and the confirmation bar is 0. Why? Because the divergence signal that you see here doesn't exist until this bar, the confirmation bar, is closed. Once that bar closes, then this divergence signal is locked in and cannot change. So that becomes bar 0, and then we have bar 1, bar 2, bar 3, and bar 4. Let me show you how this setting will affect that signal. So we go ahead and go over here to broken within bars. Notice it's within 5. So we have 0, 1, 2, 3, 4, 5. We can have a broken divergence signal all the way out to bar 5, broken within 5 bars. So if we wanted to drop that down to 4, we would expect that broken divergence on the chart to continue to appear on the chart as it does. And then if we drop that below 4, we should see it disappear, which it does. And why does it disappear? Because it's bar 4 of the broken divergence, and we've got the setting set to 3. So it has to be within the value that you set here, broken within bars, and the minimum value you can set here is a value of 1, because that's the minimum structure that you can have for a broken divergence. Let's go back to our MACDX2 example, and let's go ahead and look at the next setting. So we're going to leave that set to 5, and again I'm leaving the trade broken divergence set to yes, just so that we can see more examples of this as we continue on with our settings. So let's go ahead and take a look at this. All right, apply trading hours. Now for this, I'm going to have to set the chart to an intraday time frame, and I'll go ahead and mark the group of settings that we're going to be looking at next that are used for the trading hours, and that will conclude the chart strategy section of the settings, and then we'll get into the rest of the settings which are common to both. Okay, so I've updated the chart to a 5-minute time frame. You can see an entry over here at about 12:45. There's another entry over here at 12:10, and we've got another entry right on the timeout bar right here, and another entry right here at 13:35. So all of these trades are occurring within the trading hours, which are set to a default value of from 10 a.m. to 3 p.m. So I'm going to hit apply trading hours, and we really don't expect anything to change on the chart. And there was one that changed, this last one right here. And that one was removed because it is outside of the trading hours. Remember, the trading hours are from 10 a.m., so from about here, 10 a.m., out to 1500 hours. So that trade that was there is now been eliminated when we applied the trading hours. Now, let me go ahead and show you how all of the settings for the trading hours will affect each of these signals. Let's go ahead and, in fact, let's examine one in particular. Bring that over here. Okay, good. So that signal, you can see that is at 12:10. So that's an entry signal at 12:10. Now let's go to our settings, and I'll show you how these inputs are going to work. So you got the intraday trading start. Okay, it starts at 10 a.m. This trade is somewhere around 12 noon. So let's go ahead and change that to 1300 hours. Okay, 1 p.m. And if we change this intraday trading start to 1 p.m., then it should exclude this signal that we see right here. And it does. And so what happens then is it forces the strategy to look for other signals within that time frame, and it goes ahead and takes this one right here. Okay, so let's set that one back to the default value of 10 a.m. and then let's go ahead and examine the next one for intraday trading end. And before I make that adjustment, I want to do one thing. I've reset that back to 10 a.m. So I'm going to hit OK and apply. Let's go ahead over here and look at this one. This one is at 12:50. And we want to make a change to the setting here. So 12:50. So let's go ahead and adjust the end time for trading hours. And again, I want to highlight this very important point here. These two settings, intraday trading start, intraday trading end, those are determining the time span within which the chart strategy is allowed to post brand new entries. It has no impact whatsoever on exits. So let's go ahead and take this one down to, well, let's make it 1200 hours. That's a nice round number, and what we should expect to see is this value long entry over here on the left should disappear from the chart when we hit apply, and there it is gone. Okay, so let's go ahead and set that back to 1500 hours. The next setting I want to look at is the intraday flat time. Notice it's currently set to 15:45. It's about 3:45 p.m. Let me go ahead and hit apply and OK. And then we've got some examples here. Let's examine both of these too, okay? So let me go ahead and open up the settings and adjust that and show you exactly how the timeout exit is working. So here's the theory. The theory is intraday flat time is intended to enable you to backtest a chart strategy in such a way that you plan to close out all positions before the market closes. And then you set the time for the intraday flat time to whatever time you want that close to take place. Again, this is backtesting, and the idea here is that you're backtesting a strategy in which no positions are held overnight. All positions are closed before the market closes. That's the purpose of this setting. So let's go ahead and see how it impacts these exits, right? So we got a timeout LX here and a timeout LX over here to the right, and I'm going to adjust this to 1530. So we expect these timeout LXs to move 3 bars to the left. I'll hit OK and apply. Okay, and they do. Now let's go ahead and change that to 1515. Again, I'm taking 3 bars off that timeout, and we hit OK and apply. And you can see the timeout moves again to the left. Now I want you to be aware that this stops and target exits also has a timeout LX function, and it's listed right here. Okay. But what's happening is the chart strategy that has the earliest time for the intraday flat time is going to prevail. So it's going to exit based upon whichever one is set earlier. Okay, the hidden divergence timeout is set to 15:15, which is about 30 minutes before the stops and targets exits. So we're going to turn this off, okay, and that's how you turn it off. Intraday flat time turned off. So if you want to turn off the intraday flat time and you have your chart set up with both of these chart strategies, then you're going to have to turn it off on both. Let me hit apply and you'll notice that there's no changes, right? And now I'm going to turn that off on the Hidden Divergence MACD X2 by entering a 0 here, and then I'll hit OK and apply. And now you can see that instead of exiting before the market closes, each of the positions is held until it either hits a target or a stop loss. We can put a little bit more time on the chart here. Let's say we make that 15 days of 5-minute bars, and then you can go ahead and look at the P&L curve on the bottom. We're going to set that back to 1545, the default value, and then you can go ahead and take a look at the impact that has on the overall performance of this particular section of the chart. Okay, that concludes all of the settings that are specific to the chart strategy. The next group of settings are going to be common to both the chart strategy as well as the chart study, but that also means it's going to be common to the watch list columns. Notice I haven't shown you any of the settings adjustments on the watch list columns, which will also be applied for the scan. So I just wanted to give you a little bit of a heads up. There's going to be a bit of a transition here because going forward now we're going to be dealing with settings that are common to the chart strategy, the chart study, the watch list column, and the scan. And you need to make sure that you're aware of all of these settings, and if you change them in one location, you have to change them in all locations. Otherwise, you'll have some misalignments. It will appear that things are not working right, and you'll be upset. So please pay very close attention to these adjustments that we're making in this section of the video. I have updated the chart to a daily time frame. I have also added the MACD to the bottom of the chart because we're going to be adjusting those settings, and the lower study is not required, but I want you to see how the changes affect the MACD on the bottom and how the changes affect the performance of the chart strategy. So we'll go ahead and edit studies, and the first thing I'll do is update the MACD. I'm just going to go ahead and update some of these settings. There's nothing magical about these settings. I'm just putting it to something I can easily remember. And we'll go ahead and also adjust the average type to simple. Hit OK and then apply. So you can see that the MACD has changed, but the chart strategy is still plotting the same. We have not updated any of the settings for the chart strategy. So let's go ahead and do that now. So we'll go to the chart strategy and scroll down until we get to those MACD settings. And again, I'm going to just replicate what I just did. So we got 10, 21, 8, and a simple moving average. I'll hit OK, and then I'll go ahead and try to move these settings off to the side somewhere so we can see what happens when we update this. I'll go ahead and apply, and OK. And now I will show you how to update those settings in the custom watch list columns. Again, when I'm making these adjustments, it's going to be the same exact settings that you see for the scan. So when you learn one, you learn them both. Go ahead and edit the formula for the first column. And you can see all of the settings are listed in the exact same order. Okay, so I've updated the first 3 settings to match what's on the chart. And now for the moving average type, I'm sorry that you have to do this, but that's the way it is for Thinkorswim. You're going to have to update the code and type this in manually. There's no way to do this with a user interface at this point. So we'll go ahead and do that manually. But that's why I'm showing you how to do this. So I've updated those 4 settings for the MACD to match what's already on the chart. In fact, I can go ahead and copy those. I'm going to use a keyboard shortcut to copy that. Hit apply and OK. And then come over here and edit column 2. And then I'll update that by pasting in those settings that I just adjusted there. So there we go. And now it's important to compare the watch list columns with the chart, so that you can understand how the watch list columns are adjusting to what's showing on the chart. You've got 5 bars since the last divergence signal, and that's what is showing here. It's 5 and it's red, meaning it's a negative divergence. And then you have -1 for the trend status. The trend status is max bearish. I'll explain these trend statuses when we get to that setting. And you can see on the chart we also have 1 bar of max bearish. Let's go ahead and take a look at another one. For instance, this one here, Caterpillar, has got 18 bars since its last negative divergence, and it's in its 8th consecutive bar, that is, of max bullish. There you go. So you can see exactly how that shows up on the chart. Let's just take one more example. I'm not going to go through a lot of these. Let's do this one here, right? We got First Solar. That one's got 4 bars since its last negative divergence, and it's got 2 bars of max bullish. So again, that's a broken negative divergence. You could have spotted that by simply examining the columns on your custom watch list. Let's set that aside and move on to the next setting. First thing I'm going to do is change everything back to default settings. And we're done with the MACD settings for now, so I'll go ahead and set that off the chart. Let's go ahead and get back into the next setting. So after the MACD settings, we have the settings for the price structure. These are 2 settings that are telling the code exactly how to interpret the price structure. For the swing pivot price, it's going to be the high, the low, or it's going to be the close. The default is high and low. So how does that work? With a swing high pivot, it's looking at the high of each bar to determine whether or not there is a swing pivot. For the swing low structures, it's looking at the low of the bars to determine if a swing pivot is present. And when you change that to close, it's simply looking at the close of each bar and ignoring the wicks. So instead of looking at the high and the low, it's looking at the close. Let's go ahead and click apply and see how that impacts the signals. And yeah, there's some significant changes in the signals. There's a lot more signals showing up on the chart there. And let's go ahead and look at the next setting, which is very similar to it. Now I'll explain this one. It also has the same options available. Divergence price, it defaults to high and low. So what's happening is, for example, over here, you see this line right here on the end. It's comparing the high of 1 bar at 1 swing pivot to the high of another bar at another swing pivot. Okay, it's using the high and low. So for negative divergence, it's looking at the highs of the bars. For positive divergence, it's looking at the lows of the bars. And you have the option to turn that to close, in which case each of the divergence patterns will be comparing from one close to the other for the price comparison to determine if divergence is present. Let's go ahead and hit OK and apply. And there's very subtle changes here. What I'll point out is on this same line that I pointed before, instead of the line beginning at the high of the bar, it begins at the close of the bar. Okay, so that's sort of an indication that tells you that you have changed that setting. And now I'll go ahead and show you how to update those settings in the watch list columns. And again, it'll be the same as in the scan. These settings are a little bit more difficult to understand. You got the word default there. Okay, I want to point that out. Default. The placement of the word default within this option group tells which of those 2 options is applied. If you take that default and remove it, I'm going to use a keyboard shortcut to cut that. And then I'm going to use another keyboard shortcut to paste it. And you see that I've moved it from in front of the high-low option, and I've moved it to in front of the close option. And I'll do the same thing here. I'll cut that from here and paste it here. And now I've just updated these 2 settings, which I showed you how to adjust on the chart, and they've been now updated on the custom watch list. I'm going to copy those 2 changes, hit apply and OK, so that I can paste those in to the second column, just like that. Apply and OK. And now we can go ahead and compare our chart to our custom watch list column and see any changes that have taken place. Yes, indeed. If you look at Apple here, it's 9 bars since its most recent negative divergence, and it's got 3 consecutive bars of minimum bullish trend. Let's go ahead and take a look at another one. First Solar hasn't changed. Let's go ahead and look at MACD. That's 13 bars since its most recent negative divergence and 8 bars of max bullish. So you can see as you learn to interpret the values as well as the colors in your custom watch list columns, you can sort of begin to anticipate what you're going to see on the chart. And that's their whole intention, is they're there to help you scan a large group of stocks to understand what the conditions are before you go ahead and start thumbing through charts endlessly trying to find that one needle in the haystack. I'll go ahead and set everything back to default values and we'll get on to the next setting. So the next setting is called look back bars. And now I'll try my best to explain how the look-back bars will impact the way the code is able to examine potential divergence patterns. And this setting can be a bit tricky to understand, so I'm going to try my best here. If it's still not clear to you, then just review this section of the video again, and it should start to clear up over time. Remember earlier in the video I mentioned something about a swing pivot, swing high pivot, swing low pivot? Well, that's what these squares are. These blue squares are the swing high and swing low pivots that the code is using to measure divergence. The code must find a swing high pivot here, and it must find a swing high pivot here in order for it to make a comparison to the lower study elements in measuring whether or not there is positive divergence or negative divergence between any 2 points. And there are many settings that can affect these swing high-low pivots, one of which is the look-back bars. And we're going to go ahead and review that setting again and see its impact on the swing high-low pivots. Okay, so notice what happened when I changed the look-back bars from the default value of 8 down to a value of 3. What happened is we've got new swing high-low pivots that are appearing, and they're closer together. And this allows many more divergence patterns to be detected. We can increase that value again from 3 to 5. And then we can change it back to the original value of 8. And so you can see that the look-back period is impacting whether or not swing high-low pivots are measured between these 2 points. The lower value of the look-back bars means that the code is able to detect swing high-low pivots in between these longer structures. And the next setting is one that affects the alerts that are built into this indicator. The setting is called Alert on Close. The default value is set to yes, and I will explain by going to the chart. And you have 2 options, yes or no, to turn it on or off. So let's go ahead and look at the chart and this particular signal right here. Let's just take this as an example. This arrow right here on a live chart, as a live chart is unfolding, this arrow that is for this divergence pattern spanning these bars will show up as soon as this bar opens and will remain there so long as this bar's high is less than the high of the previous bar, because the termination point of any and all divergence signals must be another swing pivot. In the case of negative divergence, it must be a swing high pivot. In the case of positive divergence, it needs to be a swing low pivot. And a swing pivot consists of at least 3 bars. This is the bar in the middle, the high bar, and it has 2 lower highs on either side. That is the swing pivot. If this bar that follows the divergence signal trades up and above the high of that signal bar, that signal is erased because the divergence is canceled out. So what does that have to do with the setting Alert on Close? This being the confirmation bar, the bar that must close before this signal is locked in, then the Alert on Close being set to yes requires that the confirmation bar closes before the alert is triggered. If you set that Alert on Close setting to no, then the alert will be triggered as soon as the confirmation bar forms, but before the confirmation bar closes, which means that this signal may be erased after you get the alert. So let me state that another way. With the default setting set to yes, Alert on Close requires the bar that confirms the divergence signal to close, locking in the signal before triggering the alert. If you turn that setting off, you'll get an earlier notification, but you will also get some false positives because you will be getting notifications every time a potential divergence signal is starting to form, but before that signal has locked in. And so let's go ahead and take a look at the next setting. We're going to get into some really interesting stuff, which is a new upgraded feature we've added to this version of the divergence indicators, which is require overbought, oversold. And for that, I'm going to go ahead and update the charts to include the RSI on the lower study. We're then going to investigate these next 4 settings as a group so that you can understand how they impact the behavior of the divergence signals. Okay, I've reset the chart here, and in fact we're looking at a completely different ticker symbol. We're looking at IBM for this example. Let me open up the settings and move this out of the way. I want to go ahead and point out a couple of things for you, and you can see that we have a total of 4 different divergence patterns detected on this chart. And if we look at the bottom, I've got the RSI plotted, and what you want to do is identify those areas where the RSI is going above the overbought or below the oversold. You see how it changes color when it does that. And then what you want to do is, let's go from right to left. We want to look at the first point of the divergence line. Okay, so for this particular divergence line right here, we've got this bar is the beginning, and you look down at the RSI. The RSI is neither overbought nor oversold. Then we look at the first bar of this particular divergence pattern, and we look down at the RSI, and it's pretty close to being oversold, but not quite. Then we look at this other divergence line right here, and we can see that that bar, we're not even close to being overbought or oversold. The RSI is right about in the middle of its range. Over here on this one, the last one to the left here, we've got this first bar here where the RSI is actually below the oversold line of the RSI, and therefore this particular divergence pattern would qualify if we turned on the requirement for overbought, oversold. So here's how that setting works. This particular line right here, this divergence pattern, begins with an oversold condition, and it does not matter whether it's overbought or oversold at the termination point. All we care about is the starting point. Okay? That's what this setting is doing, is it's looking at the starting point of each divergence pattern, and if it's set to yes, requiring that the first bar of that pattern be in an oversold condition for positive divergence, or an overbought condition for negative divergence. What do we expect to happen when we turn this setting on for this particular chart? We expect that this particular divergence signal all the way to the left will remain, and the other three will be removed. Okay, so require overbought, oversold. I'm changing that from no to yes. I'm going to leave these others alone just the way they are. The default is RSI, and the overbought, oversold levels are in line with the default values for the RSI. So I'll hit OK and then apply and OK. And now you can examine the chart and see that only one of those divergence patterns met that filter criteria. All the rest have been removed, just as I explained. Now there was one particular divergence pattern over here that it was removed, but you notice the RSI is pretty close. It's right at 30.28, if you can read that on the screen there. And maybe there's a setting that we can adjust on the RSI that would cause this bar to dip down into the oversold condition. And I'm showing this to you because I think it will be very helpful for you to understand how your settings are going to impact the behavior of this particular adjustment. So let's go ahead and adjust the RSI settings, and let's go ahead and take this down to 10 and see if that helps. And we won't expect any changes to occur on the upper price graph. I'm only adjusting the RSI on the lower subgraph. There we go, yes. Okay, so that particular bar in question now is in the oversold condition. What happens if we update the chart strategy to match those settings? So I adjusted the RSI length from 14 down to 10. Let's go ahead and do the same thing for the chart strategy. And you can see here we've got these four settings, right? Require overbought, oversold, yes or no. We've got overbought, oversold type as RSI, and we've got the overbought, oversold levels, which you can also adjust. But if you want to adjust the RSI component for this setting, it's down here. And so we'll go ahead and update that to 10. These three settings right here are for the RSI overbought, oversold. So you go ahead and click apply, and there you have it. Let me go ahead and clear the chart from there. And you can see that that divergence pattern now qualifies because the first point of that divergence pattern is on a bar that is oversold. And we did that by simply adjusting the RSI length from 14 down to 10. You could have also adjusted the overbought, oversold levels themselves, or you could have tried a different moving average for the RSI. We're not going to try every possible combination. I think this example was sufficient to explain to you how all of those different pieces fit together. Next, I'm going to update the chart again and reset it to examine the other option we have for this setting, which is the stochastic as the overbought, oversold filter. Okay, and I've updated the chart study to include the stochastic full on the bottom, and I've removed the RSI. I've also updated the settings. So the stochastic full is using all of its default settings, which match the default settings applied in the chart strategy. And I want to point out each one of these signals. We've already reviewed these for the RSI. Now we're going to review them in light of the stochastic. So it's the same rule, and for the stochastic full, we're looking at the yellow line, okay, not the magenta line, but the yellow one. And so we examine the first point of each divergence here, This one is not oversold. This one is also not oversold. This one is oversold. And this one is not overbought. Remember, the negative divergence, it's looking for an overbought condition. When we apply this setting and set it to the stochastic for the overbought, oversold criteria, then we expect this particular divergence pattern to remain on the chart and the other three to be removed. Let's go ahead and adjust that setting and take a look at the results. So here I'm going to turn require overbought, oversold on by setting it to yes, and then require overbought, oversold type, I'm going to set it to stochastic. I'm also going to update the overbought, oversold levels themselves because the stochastic uses 80-20 instead of 70-30. And you can scroll down here to examine the settings for the stochastic full. You got 3 settings here, just as the built-in indicator, and they are set to the default values. Now let's go ahead and hit apply and watch what happens to the chart. There we go, just as I explained and just as we identified, this is the particular divergence pattern that qualifies because it is the only one that has a starting point with a bar that is oversold conditions. What if we wanted to see if we could get this particular divergence signal over here to show up? If we want that to qualify, then we're going to have the oversold condition above 21.998. What I'm going to do is I'm going to adjust the overbought, oversold levels themselves. First, I will do it on the stochastic so that you can see it clearly. Okay, so now you can see that that bar now is certainly oversold because we've moved the oversold limit. Now I'll go ahead and adjust that same value here in our chart strategy. There we go. So now the stochastic for the chart strategy is going to match what you see on the lower chart study. We'll hit OK, and then as soon as we hit apply, we look to see what changes happen to the chart. And there we go, just as I expected. This particular divergence now shows up because that bar is below the value of 25, which qualifies it as an oversold divergence pattern. And how do we make those adjustments in the custom watch list column as well as the scan? Let's go ahead and take a look at that. First thing I'll point out, right down here, you've got your stochastic inputs. A little bit further down from that, you've got your RSI inputs. So same way that you make those adjustments as I showed previously, you can change the average type, okay? You can change the length of the K period or the slowing period, or you can change the RSI length. In the case of my previous example, I changed it from 14 to 10. And then where do you set the overbought, oversold? It's this setting right here. Overbought, oversold is set to no by default, so you would just go ahead and set that to yes. And depending on which overbought, oversold type you wanted to select, you would move the word default from in front of the RSI to the stochastic if you wanted to turn on the stochastic option for this setting. And then you also have your overbought, oversold levels. Okay, I don't think I need to go through the time to make those adjustments and show you on the chart. I think it's sufficient that you've already seen enough of these settings adjusted previously that you understand how that works. Okay, so I won't make any changes there, but now you know how to make those adjustments. And I don't want to neglect the other version, the RSI and stochastic version of the divergence indicator. All of the settings we've been demonstrating so far have been common to both. So once you learn how to do the settings for the MACDX2, then you also know how to do the settings for the RSI stochastic, except for one item, which I will show you now. So let's go ahead and maximize this screen right here and open the settings. Now we're looking at the hidden divergence RSI stochastic, and then we can open up the settings, and I'm going to go ahead and show you that for the overbought, oversold setting, require overbought, oversold, you change that to yes, and then for the overbought, oversold type, you have RSI or stochastic is available here, and it's exactly the same as it appears on the MACDX2 version, except that if you want to adjust the RSI or the stochastic settings, then you'll do that at the top of the settings inputs where the RSI and stochastics are located. So we scroll right to about here. You see we have this group of settings right here for the RSI, and we've got this other group of settings right here for the stochastic. So whereas on the MACDX2 these groups of inputs are located at the bottom of the code, For the RSI version, they're located near the top of the code because the divergence patterns are keyed off of these settings in addition to the overbought, oversold. So I don't think I need to demonstrate the overbought, oversold. You've already got the basic concept. It works exactly the same on this one as it does on the MACDX2, but I did want to take the time to explain that the settings are located in slightly different locations. At this point, we have completed the review of all of the settings related to the chart strategy, and we've completed the review of all the settings that relate to the chart study and chart strategy in regards to how the divergence patterns themselves are interpreted by the code. All of the remaining settings have to do with simply aesthetics. So everything else is going to go pretty quickly here, and we're not going to need to review any of the settings for the scan or the watch list columns. Everything is going to be done right here from the chart. So let me go ahead and reset the chart and get everything in a default condition so that we can review the remaining settings. The next setting that we're going to review is called Show Pivot Top Bottom. Best way to explain this is just go ahead and turn it on and show you the chart and then explain it from the chart. Let me go ahead and zoom in on a section of the chart right here. Okay. Remember earlier in the video I mentioned something about a swing pivot, swing high pivot, swing low pivot. Well, that's what these squares are. These blue squares are the swing high and swing low pivots that the code is using to measure divergence. The code must find a swing high pivot here, and it must find a swing high pivot here in order for it to make a comparison to the lower study elements in measuring whether or not there is positive divergence or negative divergence between any 2 points. And there are many settings that can affect these swing high-low pivots, one of which is the look-back bars. And we're going to go ahead and review that setting again and see its impact on the swing high-low pivots. Okay, so notice what happened when I changed the look-back bars from the default value of 8 down to a value of 3. What happened is we've got new swing high-low pivots that are appearing, and they're closer together. And this allows many more divergence patterns to be detected. We can increase that value again from 3 to 5. And then we can change it back to the original value of 8. So you can see that the look-back period is impacting whether or not swing high-low pivots are measured between these 2 points. The lower value of the look-back bars means that the code is able to detect swing high-low pivots in between these longer structures. Okay, so let's go ahead and turn that setting back off again, and we've got our look-back bars set to 8, the default value. And the next one that we want to examine is the display trend legend. We had this on previously in the video, and I want to go ahead and turn that on again so you can see where the setting is located and how it changes the behavior of the chart. So you've got these different statuses for trend. You've got max bullish, min bullish, neutral, min bearish, and max bearish. And the next setting is going to help us to unravel exactly how those trend statuses are determined. So we set display trend legend to yes, and now we're going to set this one to paint bars. Okay, display trend method. Previously we had this turned on, in which it paints the colors of the bar based on the trend status. And so when you see the red bars here in this section of the chart, that's max bearish. When you see the dark blue over here, that's max bullish. And then you've got a couple of stages in between. And so what will typically happen is when it reaches a bottom, there'll be a rotation. Notice that right here as it's forming a bottom, the trend status rotates from max bearish to neutral and then to min bullish before it gets to max bullish. And then likewise, when it's making a top, you can see that rotation again, changing from blue to yellow and then to pink, or actually magenta. And then finally changing to red. And you can see that rotation taking place up here as well, except that in this case you have sort of a blend of yellow and blue bars forming the top. And as you've seen during the course of this video, many of the settings that impact the divergence signals will also impact the trend status. And that is because the trend status is determined by the structure of the divergence patterns. The divergence patterns are used as the main source of the trend status. And within those major structures of divergence, the code is also using the swing high-low pivots for the min bullish and min bearish. So let me go ahead and turn on another feature, which is the next setting, which is show trend levels. Now we're going to have to come back to display trend method here because I want to make sure I fully develop this idea in your mind so that you understand it. Show trend levels. This is sort of a diagnostic tool, but I included it with this indicator so that you would understand how the trend statuses are being computed by the code using the principle of support and resistance. This is much easier to see in our standard divergence indicator, so I'm going to try to do as best I can to explain it here on our hidden divergence indicator. And so let me point out this negative divergence right here, and you see that green line that extends from that negative divergence, and that green line extends until it gets to the next negative divergence. So the next negative divergence, that line moves down to this point here and then continues on waiting until the next negative divergence. Likewise, you see these red lines, okay, where you have a positive divergence, there's a red line right here, and then when you see another positive divergence, there's another red line, another positive divergence, and another red line, and that red line continues on until it finds another positive divergence. And these lines are forming levels of support and resistance. And you can see the price actually reacting to these. And these support and resistance levels that appear in between are based on the swing high-low pivots. Let me turn those back on shortly so that you can see that a little bit more clearly. So the blue squares now are showing the points at which the code is determining where the swing high-low pivots are located, and you can see that those lines of support and resistance are being pulled directly from those blue squares, both on the downside as well as the high side. So you can see up here you've got some for the swing high-low pivots. You can see a whole chain of them right here as this trend line continues higher, and then it just follows every time there's a new swing high pivot. That line terminates and then picks up where the other one left off and continues on until the next. And so what the code is doing for the trend status is it's looking at the major trend structures formed by the divergence signals themselves, and then within that it's looking kind of maybe more microscopically at the individual swing high-low pivots, and as the price action moves above or below those support and resistance levels, then the colors are changing according to that. And this really is the basic principle of the broken divergence, as you saw earlier in the video when we were explaining the broken divergence entry signals. And that is exactly what's taking place, is the divergence, for instance up here, forms a resistance level, because this is a continuation pattern and the expectation is that prices will continue lower. But if prices continue higher, what it really means is that price has broken back up through a point of resistance, and likewise on the way down. Okay, let me clean up the chart a little bit here. I'm going to leave the trend legend on. I'm going to show you this. I told you I'd come back to this, right? Display trend method, paint bars. I'm going to change that now to average. And then I want to explain that you have two different methods for displaying the trend colors on the chart. One is the paint bar method, which I happen to prefer. But some people like to be able to see the green and red bars on the chart. It helps them to understand their own measure of support and resistance. So I've also included the option to change that to a moving average. And you will find those settings right here. MA length 1, MA type 1, and MA price 1. Those are the three settings that are used to change the moving average. It does not impact in any way whatsoever the way the colors of these trends are configured. The moving average itself, you can adjust and change its settings. It will not change the way the colors appear across the chart. Having turned on the average, we'll hit OK and apply, and then you'll see that now we've got back to red and green bars just as they naturally occur, and now we've got a new moving average on the chart, and it's exactly the same colorations that were presented for the paint bar. And again, like I said, you can change the moving average length or type. You can make any changes you want to the moving average through the settings, but the dots themselves will remain the same color. And this concludes the detail review of the chart settings. We've completed this section of the video. The next section of the video, let's go ahead and look at our agenda. And according to our agenda, the next step is our custom scan. Now, we won't be adjusting any of the settings in the custom scan. You've already seen how to adjust all of those settings through the custom watchlist columns. And you've already seen how to set up the custom scan in the installation and setup instructions. And so for this next section of the video, we'll run a couple of scans using the two different signals that are included with the scan. And I'll go ahead and show you also how to add custom watchlist columns to the scan results section and how to interpret those. So let's move on over to the scan section of the platform, and then we're going to have to load the scan code into our study filter. Okay, so here I've loaded the code into the study filter, and again, we showed how to do this in the installation and setup instructions. So if you missed that, go ahead back to that part of the video and view that. We have two different signals on this scan. In order to switch between these two, all you need to do is move the hash mark. When we get to that stage, I'll show you how to do that. But right now, we're going to be running a scan for any negative divergence. And it is designed to find negative divergence that is forming or has completed on the current bar. In other words, we're actually scanning for the confirmation bar, not the signal itself, because the signal itself does not exist until the confirmation bar appears. If you're not sure what a confirmation bar is, then you need to go back and review the settings where I explain how the confirmation bar is determined. So we click OK. I want to go ahead and show you how to add those custom columns. I'm going to right click over here on any column for our search results, select Customize, and then navigate to our custom quotes. I'm going to go ahead and add the two custom quotes that we built in the installation and setup instructions. So once you go ahead and install the code and adjust your time frame, they are retained and can be used throughout the platform. So these are the same two custom columns that I demonstrated earlier in our watchlist gadget, and now I'm simply adding those two columns as they exist to the results list of our scan. And I'll just resize those columns so they're easy to see. And I've got a top level filter here set for all optionable to intersect with all stocks and exclude all over the counter stocks. I don't have any stock filters. I don't have any option filters, no fundamental filters, no patterns. I have only a study filter applied, and the code is set there, and the time frame is set to daily time frame. And if you have any questions whatsoever about how to run custom scans, then I encourage you to go over to our Hahn-Tech website, and from the menu at the top, you'll want to go to free tutorials and then select Thinkorswim tutorials. From the menu on the left, you'll want to click on Scans, which will open up this menu, and then you'll want to click on Thinkorswim Scans Beginner to Advanced. You will find a topical index included in the description of the video, which will allow you to jump to specific topics of interest. But if this is your first time running a scan on Thinkorswim, then I highly recommend that you view the entire video from start to finish. And I did update the scan to use the RSI stochastic version since the MacDX2 has gotten all the attention during this video so far. I wanted to make sure we got some coverage for the RSI stochastic version. I also updated the custom columns with the code for the RSI stochastic. Okay, so let's go ahead and initiate the scan by pressing the green scan button. Okay, and that scan did take about a minute to run, and I edited the video to save a little time. So here we have our results, and I've got a chart here that is set up to show some of the examples from the scan results. And let's go ahead and take a look at some of these. First thing I'll note is that all of the values in the first column are a value of 1, and they're all red because we have run the scan searching for negative divergence. And the scan is designed to identify signals that have just formed. Now, this particular scan was run on the daily time frame after hours, so these signals have locked in. If we had run this scan during the day, then these scans would not be locked in. They would be still in process because the confirmation bar has not yet closed. Okay, let's go ahead and take a look at this one right here, DJP. And I updated the chart study so that it will automatically display the trend legend and the trend paint bar colors. So you can see that for DJP, it indicates we have 11 bars of neutral trend, and we've just recently completed this negative divergence pattern right here. So this is the soonest possible notification you can receive from a scan for divergence signals. A lot of people get confused and they think that they can scan for this particular bar right here where the arrow is located. That's not the case. The actual divergence signal itself, as I've explained earlier in the video, does not actually exist until this bar, the confirmation bar, appears. and that signal is not locked in until that bar closes. And again, I'll repeat myself that we are running this scan at the end of day, and it is a daily time frame. So this particular signal is locked in because that confirmation bar has closed. All right, let's take a look at a couple more of these. I'm not going to look at a lot of them. Let's see, this one here, HIPPO, H-I-P-O, that shows 1 bar of neutral trend. And there we go, 1 bar, neutral trend, recent negative divergence. Let's go ahead and look at this one here, JJE. And we can see that one has about 9 bars of neutral trend right here. Don't forget there's a couple of max bullish bars right here, so you can't count all of these yellows. You have to start counting right here. That's 9 bars. And we have a recently completed negative divergence pattern there. Now I want to go ahead and take a look at this one here. This is BOH. And you can see once again we've got recently completed negative divergence, and we have 20 bars of max bearish. Now I'm going to flip the scan around to use the other signal, so I'm going to show you how to do that next. And you change the signal by placing a hash mark here and removing the hash mark from here. That's how you switch from one signal to the next. We were scanning for any negative divergence. Now the scan is set up to run for any positive divergence. And you cannot run both of these signals at the same time. If you try to do that, you will get an error message. It's impossible to have a scan with 2 plot statements. Okay, so that's ready to go. I'm going to go ahead and press the green scan button. And we didn't have many results on that one, but here we go. And notice again, the column here, first column, is showing 1s all the way through. And they're all green because the scan signals that we're running here are for positive divergence, which is a bullish condition. LFG, that one has 14 bars of max bullish. That chart is pretty awkward. Who knows what event took place here to cause that big jump in price. But there is our positive divergence. Take a look at this one, LVO. This one has 1 bar of neutral trend, and we just recently completed this positive divergence. Let's take a look at this one. This one shows 16 bars of max bullish. And there you go. So you've got another positive divergence, and you've got your 16 bars of max bullish. So there you can see how the scan and the custom columns work together to help you identify potential setups. Just take a look at one last one here, SVM. That's got 1 bar of neutral trend, and it's just recently completed a positive divergence. Okay, that's all I have to show you for scans. And now we're going to get into example charts. What I'm going to do is I'm going to show you how this indicator plots on various different types of charts, and then provide some guidance on what I think is best practices for backtesting, some things to avoid, in other words. But I want to make sure you don't skip this part of the video coming up after that, which is the live demo. I'll explain that after we get done with the example charts. It's really important that you watch the live demo in order for you to understand how to place the orders in a live market environment in a similar fashion to how those signals are presented on the chart strategy. And next I'm going to show you how this plots on a Hahn-Tech chart, as well as a tick chart and a range bar chart. So we'll go ahead and turn on the Hahn-Tech chart type, and I want you to notice first things first, nothing on the chart changes except for the candles. Hahn-Tech on Thinkorswim does not impact any of the studies that are applied to the chart. All studies that you apply to a Hahn-Tech chart on Thinkorswim will use the native open, high, low, close data points of each candle, and will not use the modified open, high, low, closed data points formed by the Hahn-Tech rules. So it's very important that you understand that. I've already built several custom indicators for clients who would like to have chart studies or scans or watch lists that are based on Hahn-Tech candles. I've also published some of those in the Q&A forum on our website, but I just want you to understand that unless you intentionally write the code for Hahn-Tech, simply setting your chart to Hahn-Tech candles on Thinkorswim does absolutely nothing for the chart studies that are applied to it. And let's change that back to a candle, and the next one is I'm going to change the time frame to a tick chart, and I have no idea what to use for an Apple tick chart. Let's try 1600 ticks. I have no idea how that's going to work out. You can see we got an alert that was triggered because we have a divergence signal here on the far right. So yes, it plots on a tick chart. Does that mean these backtest results are accurate and can be replicated in a live market, I would advise against it. If you insist on using a tick chart, you will have to do a significant amount of research and testing to make sure that your tick chart settings can be replicated from a backtest into a live environment. And I'll also mention that tick charts vary widely from one platform to another. So if you think you've got a great backtest system on a tick chart based on Thinkorswim and you're going to move that over to TradeStation because TradeStation offers automated trading with their chart strategies, you're going to be sadly disappointed because tick charts vary widely from one platform to the next. And the next type of chart I will show is a range chart. Let's go ahead and make that 50 ticks. I know I've tried that before for a previous video. I'll give it 5 days worth. I'll double click that chart and you can see that yes, everything plots. But once again, a word of strong caution. Range bar charts are predicated on the starting point. So you change the starting point and then you change the bars, which changes the signals. So I would not use a range bar chart or a tick bar chart for backtesting, expecting to get those similar results in a simulated live environment. So I'm recommending for everyone that wants to use this for backtesting and optimizing parameters to use time-based aggregations only from 1 minute and up. Another thing that I'll note about tick charts and range bar charts on Thinkorswim, prefetch is not available. And if you don't know what prefetch is, then go ahead and go to the Hahn-Tech website, go to the kitchen sink menu from the top menu, and then scroll down until you find moving averages with exponential problems. And that will explain the principle of prefetch. It's a unique feature, unique to Thinkorswim. TradeStation does not have a prefetch, and I don't have time to explain it in this video, but it is one item that is very important that you understand. When you load a tick chart or a range bar chart on Thinkorswim, the prefetch feature, which is unique to Thinkorswim, goes away. Once you understand what prefetch is, you'll understand the problem that causes. So I strongly advise that you stick to time-based aggregation periods. So let's go ahead and move back to a time-based aggregation period. I'll go ahead and select daily. And then I want to go ahead and review some different ticker symbols. Like for instance, some people might be wondering, how does this plot on futures or Forex? So let's go ahead and do that now. I'll bring our watch list back in. And I've got some watch lists set up here. This one is for Forex. And we've got Euro, US dollar. So you can see how that plots on the Euro, US dollar pair. And then I've got the US dollar, Japanese yen. Okay, notice this is a long only strategy on the chart. And so in an uptrending instrument, it's going to do well. On a downtrending instrument, it's going to do poorly. So let's look at the US dollar, Canadian dollar pair. There we go. And I've got some futures here, but I've got another list of futures I'll bring in. There's Bitcoin. And there's the Japanese yen futures. Let's go ahead and switch over to my futures. So here's the E-mini S&P. And here is the Dow E-mini and the NASDAQ E-mini. I'm not going to look at all of these, but here's gold and there's crude oil. And let's pick one of these indexes. Indexes don't have volume data, and I can assure you that there's nothing in this code whatsoever that uses volume data, so you should be able to use this with any of the indexes. Okay, and I think I've covered all of that section for example charts, and next we're going to get into the live demo where I show you how to manage the orders on a simulated live environment. It's a little buggy, I'll warn you ahead of time. The other thing that I'll mention is that when you do your simulated live trading, you should probably do so on paper money, because the paper money side is going to run a lot more smoother than the on-demand feature. I don't recommend that people try to practice using the on-demand feature, and you'll see exactly why I make that recommendation when we get into the live demo. Okay, I have the chart set up in preparation for our live demo, and you can see the signal here that we're going to be using for this example. So in the benefit of hindsight, we're able to identify exactly when it enters and when it hits the target, so we can track this using the on-demand feature and not take up a whole lot of time on the video. In this particular case, we are using the MACD X2 version, and I have adjusted the stop and target so that this particular signal is taken out for a profit right here. I have the active trader screen open on the right hand side of the chart, and you can see that I've got it set to 100 shares with auto send, and I'm using a template called trigger with bracket, what it does is it sends the limit order and the stop order automatically as soon as you enter the trade. So notice when I hover my mouse over the buy market, you can see on the active trader screen that you've got a limit at the top and a stop at the bottom. So those are automatically going to be placed when we hit the buy market button. So let me go ahead and update the chart so that we are just before this bar closes, and then we'll begin the live demo. Okay, so here we've got our signal, broken negative divergence, that just appeared on the chart, and we have to wait until this bar closes because that's how the strategy is marking the buys and sells. So this signal is not valid until the bar closes. According to the clock, we've got about 2 more minutes before this bar closes, so I'll go ahead and fast forward here to save some time. Just a quick update, the price of that bar fell back below the high of the signal bar, and the broken divergence signal disappeared. So this is just to reinforce why we have to wait for this bar to close before we place our trade, because the signal is not valid until that bar closes with that signal on the chart. Okay, we got about 15 seconds to go before this bar closes, and I will mention again that there are some bugs in the on-demand feature, and the chart does not update as quickly as the active trader window does. So fortunately, we'll be able to execute our order right as the bar closes, which is right now. And then we just have to be patient and wait for the chart to catch up. Again, if you're using paper money, this is going to work much more smoothly. The on-demand feature is very buggy, and I found that I have to choose stocks with relatively low volume in order to get them to even work. So we're just going to wait for this bar to update on the chart. It's already closed, technically speaking, and as soon as this bar closes, then our target and stop loss levels will appear, and then I can adjust these orders accordingly. Okay, so the chart is finally starting to catch up, and we've got 507.15 for our target, and we can dial that in right here on the chart. Well, I've got it at 507.14, that's pretty close. And then for the stop, we want it at 502.60, and put it right there at 502.59. Okay, that's as close as we can get by moving the orders around on the chart. We could go over here to the active trader and locate those orders and put them exactly to the penny where we need them to be. But I think for the purposes of this video, close is good enough. And the main point is that I waited for this bar to close before I entered. And then as soon as the target and the stop shows up on the chart, I know exactly where to place my limit and my stop order. Now I could adjust that target while the trade is still active. I could update the settings, change the percent, and then it will go ahead and move this up or down depending on what value I select. But then I would need to make sure that I adjust the limit price to match wherever that blue line is. Okay, so now we have to wait for several new bars to play out on the chart, and I'm not going to bore you to death with having to watch all of those bars, so I'm going to go ahead and pause the video recording, and when those bars get close to the target, I'll go ahead and update you as the trade progresses. And we've added another bar to the chart, so I figured I'd go ahead and update you. Again, that bar is stuck right where it's at right now, even though the price is continuing to update on the active trader. So we need to be patient and realize that the chart is going to be a little behind, but at least you can hover your mouse over the active trader window and find out exactly where the current price is in relative to the chart, right? So we can put our mouse right here and you see the crosshair on the chart. That's where the current price is right there. So the active trader is tracking the price correctly, and we just have to wait for the chart to update. So I'll go ahead and fast forward a little bit here to save some time in the video. And we've got another bar to the chart, and you can see how buggy this is. It's catching up. That's what that erratic motion is on the chart, and then it just stops dead there. And I've found a handy little tool on the active trader window. You see these plus and minus buttons over here? They look like magnifying glasses. So what I did is I experimented with those, and when you hit the minus, notice that the prices on the active trader are skipping every 5 pennies, so every 5 cents. What that allows me to do is it allows me to keep the limit order in view as well as the price. So I was able to compress that. We could hit that one more time and I'll show you how that works. You see how the price now looks really close to the limit, but really all we've done is we've compressed the values here in the center of the active trader window. So I'll go ahead and expand that back out a little bit. So this at least will help us to see exactly when that target is going to be hit. And the price is getting pretty close here to hitting our limit order. Obviously the chart is not up to date. There we go. Now the chart is starting to update and get caught up with the active trader window. Looks like we traded up and through that limit order, but we didn't get triggered yet. So this might be another bug in the on-demand feature. The last couple of videos where I did this live demo, it triggered exactly as soon as it hit the limit order. And yes, indeed, that appears to be what happened. The chart is finally caught up. The target was hit. We watched it happen right here during the video, and for some reason the active trader window did not trigger the order to close at the limit order. So okay, so at this point I'm just going to manually flatten the trade because we have some bugs here in the active trader during on-demand feature, and I'm sorry that it's not as smooth as Silk. It's just the problem with the on-demand feature. But I hope that you understand the basic principles, which is in order to replicate the way that the chart strategy is back testing your signals, you need to wait for the signal bar to close before you place your order. And you use a market order because that is the only way to ensure a fill. You might get some slippage and you need to keep track of that slippage and compare that to your back test results. Some slippage is going to be in your favor, some is going to be against you. And then the other thing that you need to do is make sure that you place your orders at the stop loss and the target levels, and then you just sit and wait for everything to unfold. And again, like I said, if you do this using paper money, then you'll have a much smoother environment for practicing. I definitely do not recommend people use on-demand for practicing their trading, but I hope this live demo was sufficient to help you understand how to place your orders and manage them in tune with the chart strategy. Well, we've covered an awful lot of material in this video, so don't feel bad if you need to go back and review certain sections 1 or 2 times again and make sure that they sink in. I really hope that these tools are useful for you. I hope that they allow you to be more intentional about your trades, to identify and refine optimized trade entries and exits for your existing trading methodologies, and also help to discover new ones using these tools. Thanks for watching, everyone. Take care.